My name is Mike Munzing. I'm with a company by the name of CRESTLINE Funding. Based in Irvine, I'm down here in San Clemente. I've been a lender here in Orange County for about 20 years. I've been in real estate, I think it's about 26 years now. So I've been doing this a long time. I've handled the residential side. I've handled the commercial side. I want to be here for you and for your buyers. Once again, lending 20 years. I know what I'm doing, and I want to be here for you. Now let's jump right into this week. I'm shooting this on Thursday, just a little bit early, but it looks like the rates for the week are looking good. They've come down. The bond market has been fantastic. So if you go to my website at www.mikemunzing.com, you can see the rate sheet here. You can print it, take it to your open house. That gives you something to talk about. When you're at those open houses, it's important to have good information to catch the attention of those home buyers. I know they're still out there. I know they're still coming by. You can talk to them about this. One thing I want to touch on real quick, it's come up a few times this week, is the fact that when somebody currently owns a home, somehow the word hasn't gotten out, a lot of you know this, but if they currently own a home, we're having trouble getting them to be a move-up buyer because they cannot take credit in most cases for the rent that they're going to propose that they're going to receive coming in on the existing residence. They call it the buy and bail plan. FHA jumped on that about a year to a year and a half ago. Fannie Mae and Freddie Mac jumped on that as well. I think a lot of you are, either didn't hear about it or not remembering that that is a major problem. And I'm running into that quite a bit where people have called me, realtors have called me, some of you may have called me. It sounds real good, but they said, hey, and they own a home, as though that is a good thing. Right now, that's a tough thing. That is why the first-time home buyers are so rock solid right now. Hey, the next item I want to cover, a lot of you come to me and say, Mike, what are the rates going to do? What's going on? We try to watch trends. We try to figure out what the government's doing. We try to figure out what is coming down the pipe from the government. And this is where it gets very frustrating. My friends over at Think Big, Work Small, Brian and Frank, brought this to everyone's attention in their video the other day. I want to bring it to you as well. Ben Bernanke was being interviewed by Maxine Waters on Capitol Hill just the other day. Now, I want you to watch this and listen to what Maxine Waters is saying. She's been, I think since 1991. She's up in LA, she's a congresswoman. And these are the people who are deciding our future and our rates. Very frustrating. Watch this video.
The last thing I heard before I came here this morning was a prediction by some of the analysts on television that in about 1 month, we can expect that there will be an increase in interest rates on mortgages and home loans. And everybody that I've talked to really believes that this change that you have made in the federal funds rate is what's going to trigger that. Is that true, or did you give any thought to this? How can you guarantee that it won't?
Congressman, it's not the federal funds rate that we raised. It was the discount rate.
The discount rate,
which
okay.
Is the rate at which we lend on a special overnight basis to banks. We cut that very low because of the financial crisis. We wanted to make sure that banks had access to lots of liquidity in case there was a run on the banks. Now that there's easy access to private markets, they don't need that kind of help anymore. So we've just slightly reduced the subsidy we're giving to banks. It has nothing to do with the federal funds rate or with the overall stance of monetary policy. It has to do with normalizing our extraordinary support for the banks and the financial markets. But we don't anticipate that action having any implications.
Well, let us be clear. The change that you have made, no matter how slight it is at the discount rate, will increase the amount that they have to pay for their loans. Is that right, the banks?
Well, it's a very small amount in terms of the amount that they borrow.
Yeah, it is. I understand that. But what I'm trying to understand is there a connection between the increase in the amount of money that they have to pay and household interest rates?
I don't think there's any material.
Can you assure us that that will not happen?
I think it's extremely unlikely, and if it were to happen, we'd look at it. But I don't think there's any connection.
Well, but what I'm worried about is you still have a lot of mortgages out there, adjustable rate mortgages, with 3% margins on them. And if, in fact, this is going to trigger an increase, we're going to have more foreclosures because the interest rates are going to be higher. That's what I'm worried about. And the predictions are that we have not seen the end to these foreclosures, that with the exotic loans that were extended, people are going to be more at risk. I don't want to see the interest rates increase on these adjustable rate mortgages.
There's no linkage between adjustable rate mortgages and the discount rate. It's linked to the federal funds rate, which we have said we anticipate will be at an unusually low level for an extended period. Well,
I want to be clear for this committee that the actions that you have taken have no connection to the possibility of an increase in the household interest rates. We don't have to worry about that. Is that right?
The reason we took the action was, again, to reduce the subsidy that we're giving to a small number of banks.
I know when you reduce the subsidy, that means they got to pay more money. Is that right?
I don't think there'll be any effect on consumers.
I beg your pardon?
I do not expect any effect whatsoever.
You don't expect them to pass on that cost to the consumer?
No, because it's very small, and I don't think it will affect it.
Did you catch the fact that she was talking to the head of the Fed and she's bringing up people she saw that morning on TV? Let's watch this other clip from Maxine Waters.
What guarantees are you going to give this liberal about how that will reduce the cost of gasoline at the pump if we let you drill where you say you want to drill?
I can guarantee to the American people, because of the inaction of the United States Congress ever increasing prices unless the demand comes down, and the $5 will look like a very low price in the years to come if we are prohibited from finding new reserves, new opportunities to increase supplies.
And guess what this liberal would be all about? This liberal will be all about socializing, would be about basically taking over and the government running all of your companies.
I think that brings it into a little bit more perspective that it's a tough market right now. We don't know what's going to happen with the rates. I know that when the government is printing money, doubling the money supply in a year, we all see it. They're predicting that the only direction the interest rates can go in the future is up. So we have to be prepared for that. And we have to watch what's going on when the feds are talking about no longer buying mortgage-backed securities. As of the end of this month, it's going to create some issues. If they don't continue to buy, that will be a problem. We do need to have some solutions long-term. We need some other money into the market, but we'll be watching those rates. I'll be bringing this to you as soon as I know. I want you to know so you can let your buyers know what to do. But as it stands for right now, the rates are solid today. That's all we can talk about is today. So much craziness going on in the market. But as we head into the weekend, should be a beautiful one. I've got great programs. Fantastic programs. FHA, Fannie Mae, Freddie Mac. We can get your buyers approved. Let's work together. I just try to make these videos to give you good information on what is happening. And once again, as you can see my little bumper sticker I've got coming, I am down here in the South Orange County area running for the Central Committee seat. I will be on the June 8th or in the June 8th primary. So if you're down here, you probably got an email from me today, being Thursday, on that, and I have a website for that as well. But vote for me, spread the word. I'm just trying to do the right thing down here. I know a lot of us are yelling at the TV and getting a little frustrated, but I want to bring good information to you and try to make positive changes, defend our industry, defend our business, defend what is right. We all work hard. We need to be honest and have character and values, and that's what I want to bring to the table. All right, God bless you. God bless your family. God bless America. Let's work together. Take care. Bye-bye.